Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and the focus on this edition is going to be on the earnings. And the company on our radar right now is Syngene International, which has come out with its earnings. We've seen for the March quarter, the revenue is increased by over 31% from the same period last year, and 26.5% sequentially. The operating profit, also known as EBITDA for the March quarter, has stood at 314 crore rupees. That's also up by 25% on a year-on-year basis. We've seen the EBITDA margins come in at 31.6%, the highest in the last 4 quarters as well. Also, for the full fiscal year of FY23, we've seen the revenue growth has also risen by 23% as well. That is versus the guidance about high teen growth. Now, joining in to discuss more about the insights from these quarterly earnings and the outlook going forward with me is the top management of the company. Mr. Jonathan Hunt joins in. He's the CEO of Syngene International. Welcome, Mr. Hunt, and thank you so much for speaking to us on Business Today TV. Great to have you with us. First up, let's talk about the earnings. Good quarter for you. It has beat estimates for some of the parameters as far as the street is concerned as well. Your own thoughts. Are you happy with the performance this quarter? And also, if you can share with us, what are the top 3 or 4 key factors that have driven growth for you?
Yeah, super. Actually, really good quarter. Very, very strong end to the year. We came in 10, 11 percentage points ahead of the analyst consensus. And actually, it was a story that built through the year. Back at the first quarter, we upgraded our expectations for the full year FY23, and we saw good momentum building through the year. Now, structurally in our business, the fourth quarter is often the busiest one, and this year was exactly that. Largest quarter ever, and I think it really reflects a number of moving parts within the company. So simply, our business splits into research services and development and manufacturing. Within research services, we have dedicated centers and discovery. They both had a good year and a good fourth quarter. Some pretty positive demand signals coming out of Europe and the US, as many of our Western clients try and catch up a little bit on ground that they felt they lost during the pandemic. If you then look in the other half of the business, development and manufacturing, it was a really important year for us strategically. We've been investing for a number of years in biologics, or in building the capability to manufacture biologics, and that business started to take off in the fourth quarter. We signed during the year a strategic partnership with a leading animal health company, and in the fourth quarter, we started putting that to work. So that was one of the drivers of a strong end to the year.
Right. If you could also detail for all our viewers, we've seen good performance as far as the consolidated bottom line for the company has been seen for the entire fiscal year at 17.3% growth. How do you see the trend going forward in FY24? Because we're looking at a number of factors that could be looking as headwinds in the current global scenario.
That's true. For us, actually, it's quite an optimistic outlook. I think we're going into FY24 with some good momentum. So we guided on the revenue line. This is a constant currency, high teens. That compares quite favorably. If you strip the currency out of FY23 and do that at constant currency, we came in at low to mid teens growth last year. We're upgrading that to high teens for the year ahead at the revenue line. And then with some decent cost control, I think you'll see some sort of leverage and growth flowing through to EBITDA and all the way down to PAT. Now, in our particular case, we have a little bit of a structural headwind on tax. Many of our operating units sit within SEZ schemes, the special economic zones. And as those tax benefits start to unwind, we move to a more normal tax rate. But it's well understood by the market. So not quite the same operating leverage flowing through the PAT line. It's still growth. But in a world where a number of people are worried about macroeconomics, rising inflation, that looks pretty good.
Okay. If you could also help all our viewers understand how have your various business divisions really performed in this quarter, and going forward from here, if you could list out in the areas of priority, which will be your key growth drivers.
I'm actually not looking to list them out in so much as the strategy is one of being a broad service provider. So we partner with biotech and pharma companies principally, so life sciences. These are global companies. Their own operating models are to start at discovery, flow those projects through into development, and then all the way through into commercial. And we've built Syngene really to replicate that. So it's the integration of the different parts of the business. Our discovery teams working seamlessly with our development teams supporting manufacturing, manufacturing ultimately being the final stage before those products go through to patients around the world. And it's in creating that value chain that we most closely match the underlying operations of our customers and our partners. So I expect all of them to continue to progress. I think the structural shift for us, we saw it in the fourth quarter. It will be a trend for the full year. It's just more of manufacturing. It's taking a larger share of the overall company, but it's a new business for us. We've been investing in that, and we're just at that takeoff point.
Also, if you could talk a little bit more about the Zotis partnership as well. The numbers are also aided with that, and what can one really expect going forward from here?
Yeah, I mean, I can talk a little bit about the relationship. We've actually had a relationship for over a decade. We started back in 2011 with them on the discovery research side, working on helping them find new medicines for animals. You know, it's an animal health business. And in the last year, one of those made it all the way through to the commercial scale that is actually getting used now in various countries around the world. And we signed a manufacturing deal to reflect that. So it's an end-to-end relationship. It's a partnership of quite some long standing for us, coming on for its 11th, 12th year. And it's a very good relationship.
Okay. And, if you could just help me understand, what is your own sense of the outlook for the entire pharma industry in India for financial year 2024? As an industry, despite the kind of headwinds and the macroeconomic uncertainties, slowdown in mother markets like US, what kind of growth would you envisage for the industry at large and then for yourself?
Yeah, that's it. I'm much more qualified to talk about Syngene than I am the industry. Remember, of course, we're a little bit of an outlier. The vast majority of listed pharmaceutical companies in India are product-based companies in the generics industry, and that's just not our business model. We're a service business that sits within life sciences. So we're atypical. We're the only one that's listed. So I'm on much safer ground, giving you a sense of how our business is going to progress. And on revenue, high teens, constant currency growth. So a healthy trend, long way ahead of what you'd expect GDP and various national economies to do. So relatively to the economy, we're growing well.
Okay. We've seen the stock prices really surge right after the earnings. We've seen the stock hitting 52-week high levels after the company surpassed your guidance as well, the FY23. So there are a lot of positive factors that the markets are really reacting at. Going forward from here, do you expect the performance to continue, the value to shareholders to continue to deliver? On what all fronts should the investors continue to keep focus?
I think I've wrapped that up in our guidance. High teens growth for the year ahead, good margins, around 30% at the EBITDA margin line, and then continued growth in profit after tax. So I think the investors know what to expect. We've just got to get on with delivering it.
Okay, on R&D, what can we expect, the kind of innovations that you must be looking at the current point in time, the investments that you may be looking at making in this current juncture?
I go back to the point I was making. We're a service business. We don't invest in our own R&D beyond the building of our capabilities. The projects we work on are our clients, and we've got a very, very broad footprint. I mean, we work with 450 active clients in any given year, and that's a growing number. We work with 15 of the top 20 biopharma companies in the world. We work with some of the newest startups, some of the most innovative. We're delighted to engage with all of them. And their science is our science, in the sense that we're actively engaged in the scientific problems they're trying to unravel.
All right. Well, thank you so much, Mr. Han, for being with us on the show and discussing so many insights with all our viewers. And here's wishing you all the very best for the upcoming quarters as well. A good quarter. For now, you could continue to celebrate, and we shall continue to touch base going forward from here to understand more about your business outlook going forward. Thank you so much.
Thank you.
If you like the video, do like, comment, share and subscribe.